Hey, Dan Passarelli here. The S&P 500 closed just a little bit lower today, with SPY closing at 680.27. That's down 312 on the day. Technically, we're seeing some lower highs in conjunction with lower lows. So is this a downtrend pullback within a larger uptrend? Or is this the beginning of a reversal back to a downtrend that could last a short or a medium or a long amount of time? Well, let's talk about some of the factors at play here. One of the main factors at play here, of course, in the recent bullishness is the expectation for a rate cut in December, which is coming up. This Friday, we have PCE, which is the Fed's preferred inflation gauge. That's going to be a major deciding factor on what the Fed does in just about 2 weeks. Now, on top of that, we also have had some pretty interesting stuff going on in silver. And let's just look at the SLV ETF. As those of you who watch my videos and have for a long time, you know that I have been a bull in silver for the past few months now. But this becomes a pretty tricky place to start getting long. If you've already been long, great. But we're in the midst of what they call a short squeeze in silver. Now, you might think, how can there be a short squeeze in silver? Is this like the Hunt brothers in the 1980s? No, silver is above the price that the Hunt brothers drove silver up to when they tried to corner the market back in the 80s. But the dollar has gotten significantly weaker since then, of course, and we've had inflation since then, of course. So that's just something that would have happened eventually anyway. How could there be a short squeeze? Well, there's a couple of things going on here. First, there has been, in the commitment of traders report, there were a number of short positions in silver by traders going into the year in the futures and underweighting silver. And so those traders are just forced to buy it back. They've got to either roll or deliver anybody who's short, or else they just buy them back, and that just exacerbates the short squeeze. There's also a lot of inventory concentration. A lot of the silver that's not used for jewelry and that kind of thing, a lot of it's concentrated in really just a handful of vaults and ETFs. And the ETFs, like SLV, literally stores silver. It's sitting in a vault somewhere. And until there's a lot more dug up from the earth, it's hard for people to get their hands on it. In fact, even London, in their central bank, they have more, basically, I'll just use plain English, requests for silver than they have. So they are effectively short silver. What that does is that drives up the spot or the cash above the futures prices. So that puts the term structure of silver futures in what we call backwardation, where the spot is actually at a higher price than the futures prices, which is the price expected in the future once you account for the basis. So this is a pretty tricky time for getting long silver. But what short squeezes tend to do is they tend to spike and then pull back. And at that point, I know I, for one, I'm going to be looking for spots to get in and pick up some more. Hope that helps. This is Dan Passarelli, Trade Smart.